Good evening, you're watching The Big Question. I'm Sanjana. For most of us, a savings account is the first step into the world of banking. It's where our salary lands, where our emergency fund sits, and where we trust our bank to keep our hard-earned money safe. But now, for many Metro customers, that trust just got a price tag. 50,000 rupees. That's the new minimum balance ICICI Bank will require for new savings accounts. For lakhs of ordinary Indians, for you and me, that's not spare change. It's more than some earn in a month. Is this simply a smart business decision in a competitive banking landscape, or are we seeing the quiet creation of an elite banking club? And most importantly, what does this mean for you, the customer? Joining me to break this down this evening, I have going to be joined by D.K. Mittal, former banking secretary, who will give us the inside view of bank and industry thinking. Karthik Jhaveri, Director of Investments at Transcend Capital, with practical advice on how customers can respond to this. Aditya Shah, founder of Hercules Advisors, whose market commentary on this has sparked a debate online and maybe offline as well. And Khushbu Jain, partner at Arc Legal, to weigh in on what this means for consumer rights and legal recourse. So let's get right into it. Mr. Mittal, you've seen the inner workings of policy and banking. Does this steep jump to 50,000 rupees minimum balance reflect an unavoidable cost pressure and a strategic shift? Or would you say that it's a signal that large private banks are moving away from serving the mass retail customer?
It is an indicator of the costs of managing saving bank accounts because the process of opening, which was simplified with Aadhaar, has become complicated because of AML guidelines. If a bank opens an account and something wrong happens in that by way of fraud, then they are held accountable. That means they have to verify the existence of the customer's residence, which means a huge cost. It was thought that with Aadhaar coming in, bank will not have to do any verification of the residence of the customer, but that's not the case now. So it's primarily because of anti-money laundering guidelines, which are being strictly implemented by the RBI, and very rightly so. There is a challenge to the banks in managing small saving banks account.
Okay.
And this issue need to be looked at in totality. And I don't think any bank can, leave aside the bottom of the pyramid. No bank would like to leave that, but they have to make money. They can't be making losses on that, and that is the issue.
Okay. So you're saying it is a business at the end of the day, and that's the big picture industry view. But what does this mean for how the market will react? Aditya, from a market and a competitive standpoint, will this force other private banks to follow shrinking choices for customers, or will it hand smaller banks and fintechs an opportunity to then capture disillusioned account holders?
So I don't think that that's a great move from ICICI Bank. Mind you, ICICI Bank, HDFC Bank, and SBI, these three are systematically important banks.
Okay.
And these three are meant to serve a mass number of people. Nearly 40 to 50% of India's bulk deposit lies in all of these three banks. What the bank could have done is they could have segmented their savings bank account, and they could have offered minimal services on their savings bank account with very minimal balance. And as you want more and more services, bank could have graded their savings bank account, as many banks really do. So from my perspective, a systematically important bank coming out and saying that I will take 50,000 minimum deposit in a metro and 10,000 minimum deposit in a rural area doesn't make too much of sense to me. Banks do make a lot of money from cross-selling a lot of products. And mind you, ICICI Bank makes a profit of thousands of crores. And RBI does have an obligation for systematically important banks to serve customers with their criteria per se. So from my perspective, of course, the bank at the end of the day, a private bank is at the end of the day a business, but it also has some obligations with respect to serving people, which has been set off by the RBI with respect to systematically important banks. So from my perspective, a smarter strategy would be to create their savings bank account and to provide some basic services with no minimum balance. And from there on, if people want extra services, they could start to impose a minimum balance. So that could be a smarter strategy. And I don't think many banks will follow suit. I think Jay Kotak tweeted today that 96% of Indians earn only 25,000 rupees a month. And if you are asking for 10 or 50,000 rupees of minimum savings bank account, then there's a problem that a lot of Indians go out of that category, and Indians require private sector banks. India cannot only rely on public sector banks. Private sector banks also have to come in and help the banking sector as a whole. So
Absolutely.
grading of, in short, grading of the savings bank account is a better strategy.
Okay, okay. So additional services, Aditya Shah is saying that's the way to go, and also potentially voicing what Mr. Mittal is saying with regards to it being a business at the end of the day. But if customers do look elsewhere, then they'll need a clear plan to keep their money safe and penalty free. So let's bring in Karthik for that. So Karthik, for an average metro customer suddenly facing a 50,000 floor, which is quite a bit, what's your step-by-step plan today to avoid fees, to maintain access to good banking services and still keep your savings working for you?
So instantly, Sanjana, I spoke to my relationship managers and all at ICICI Bank.
Okay.
And I said, what are you guys doing? So they very clearly said that existing accounts stay as it is.
Sure.
Whatever has been committed to you in the past, that remains as it is. This is for new accounts that will be opened hereafter. So the thing is, we don't know for sure. While both my co-speakers have confirmed, it's a business at the end of the day. So maybe ICICI Bank has some strategy. Maybe they've thought about something, but it's going to make consumers think whether they want to open an account with ICICI Bank or not. So there will be an initial knee-jerk reaction. If others follow, then so be it. If the others don't follow, then ICICI might have to wait for some time. Maybe they don't want new accounts to happen because there is a cost per account. Internationally, everywhere, there is difference between something called digital banking and a banking with an RM. And then the more sweeteners you want, the more minimum balance you have to place. So that's one way to look at it. The other way to look at it is, if you don't mind the 500 rupee charge for not maintaining a balance, then you will be charged 6,000 rupees a year. And that's your cost, basically, to have an account with ICICI, because that's what they said, 6% of 500 rupees. So that's the other point to think about. And the third thing to think about is, nothing has happened to the ICICI Bank stock. So if institutions and if larger players thought that this is going to dent their business, the stock would have also suffered a little bit. From a retail point of view, I think it's very, very clear that people who want to open an account will think about it. But I'm waiting to see how ICICI Bank will operate in the corporate salary segment, because they are known to go to a company and pick up 200 accounts, 500 accounts in a short, even as much as 20 accounts. So what will they do with those accounts? Will they give the same 50,000 minimum balance requirement, or will
salary? I think salary accounts are exempt from this, Karthik. So
yeah, so they.
Yeah. So I think that one then has been put to rest.
Sure. So having said that means all the business owners and all the private players who maybe they have some data, maybe they have done some research, and on the basis of which they think that this is a profitable way to move forward. So perhaps they may want to do that. But in the short term, every business owner and everybody who's wanting to open an account will first want to check out what ICICI Bank versus ICICI Bank, what Axis and a Kotak and an HDFC and SBI have on offer. See, because technology is the same. We expect the same level of technology amongst any bank. 10 years ago, we don't like that technology. We want the current technology. But maybe there's a cost to pay. And ICICI probably spends about 9 to 10% of its operating expenses on technology, as much as employee costs. So I think there might be something. We'll wait and see what the bank has to say.
Okay, so that's a practical roadmap, and there's still the question of fairness and right. But before I come to Khushbu, because also this is in her wheelhouse, I'd like my producers Arunima and Gargi, if they could just play out some of the reactions that my colleague Shubhana went on ground and got outside ICICI Bank, and what we were hearing from the account holders. Let's play that out for you first.
From 10,000 to 50 is not the advisable amount. they could have made it 50% more or some percentage wise, 10 to 15 or 20. It is from 10 to they made all of a sudden 50,000.
They don't want the average Joe to come in anymore. They want elite customers. Go to any other bank. There are so many private banks, so many smaller, thousands of banks. I mean, plenty of opportunity. These guys probably taking a call that will basically hurt them.
Not every parent can afford to give their children 50,000 to just open a bank account. So I don't find it very visible for everyone.
महंगाई बढ़ाई है लेकिन कम रहना चाहिए, ज़्यादा से 20,000 होना चाहिए.
Right, I don't think any customer or account holder is actually in favor of this. Khushbu, does such a sharp hike undermine the principles of financial inclusion? And do you believe that there is a legal or a regulatory case for setting limits on how high banks can raise these kind of minimum balances without oversight?
See, if you look into Reserve Bank of India, it has expressly clarified that the banks enjoy full autonomy to set their own minimum balance rules. Am I audible?
Yes, yes.
So RBI has been very, very clear in putting out that banks have their own policy, that they have autonomy to set their own minimum balance, rules with respect to minimum balance, and there is no regulatory mandate dictating the amount by the RBI. So RBI's guidance focuses only on the transparency and board approval and other things. But when it comes to setting of minimum balance rules, I think that autonomy is given to the banks. And banks usually go for a lower rate because better the offering, better the lower rate is higher the number of users or account holders that they would generate and do it. Now, this move, I think my all earlier panelists have spoken about, that must be to go for premiumization of account holder. They don't want the people with the lower income strata to practically open bank accounts for whatever purpose. It can be for profit purpose or it can be for feasibility purpose. But when it comes to regulatory aspect, the RBI has been very clear that the autonomy lies with the bank, not with there is no mandate by the RBI on that part. But I think in the future, they will have to see through, because this stands of 50,000, which is much higher of an amount if you look into to maintain a minimum balance, an average minimum balance in a month. It's much higher to people's income. And one side you talk about financial inclusion, you talk about digital India, and on the other side, when you come to something like this. But on the contrary, if you'll see, there are so many public banks or for other banks which are coming with zero balance, zero balance requirement, minimum requirement in their account, or no minimum requirement of a balance to be kept in an account. So I think they will have a tough competition there. But I think this move have been strategic, where they want to have only some premium customers. They want to eliminate the new customers coming in, which can have a low balance aspect. And I think this is also applicable, not retrospective. That's where I think one can have some legal issues. It is prospective. That means any new customer from specific date who will join ICICI will have to mandate. The existing customer do not have any such mandate. They can continue with their minimum, whatever the 10,000 or whatever the criteria they were into, they can continue with the same criteria, but this will not be applicable. So in this way, if you look into both regulatory and legal challenges, legal aspect, which a customer, existing customer can raise, both of these issues eliminates.
Okay, all right, absolutely. Great points over there. But let's just look at it. And Aditya, I know that you dismiss this, but if this is the start of a trend, how far can it go? Do you expect other private banks to quickly follow suit? You've said no. But what does that do to competition in the savings account market?
One thing is very clear that if one needs to understand is, even though ICICI Bank is a business, it is a systematically important bank, and ICICI Bank, HDFC Bank, and SBI, they hold nearly about 60% of total India's deposit.
Wow.
ICICI Bank, HDFC Bank, and SBI, they reach places where no other bank practically reaches, right? Financial inclusion is at the top priority of RBI. I will wonder if RBI will have a quiet word with all of these banks, although there is no regulatory aspect to it. As I said to you, of course, the bank can go ahead and do premiumization of customers, but the RBI will not want customers moving away from the banking system into fintechs, into the cash economy again. This has a serious risk if all banks start to raise their minimum account deposit. We don't want to go into a situation where the cash economy comes back again. So I wonder there will be a quiet word from the RBI. They will say, okay, you have the liberty to do this, but you keep in mind the financial inclusion aspect of it. You try to give some basic services to customers at a lower minimum account balance, or you try to waive out the balance and say that these are the only basic services that we will do, so that the cost of acquisition of customers is far lower on a zero account balance. There, the bank would say that we'll only give you an online banking platform, we'll not give you a relationship manager, and you manage on your own. So, from my perspective, it raises a challenge that financial inclusion will get defeated. And I have, in my opinion, I have followed all banks. I don't think any other smaller private sector banks or even likes of SBI or HDFC Bank, they have any plans to do this. It is strange why ICICI Bank has done it, and I think there will be a quiet word within the system to try to tweak this system so that financial inclusion purpose is not different.
Okay, okay. So you're of the opinion that this could potentially have some kind of backroom channel discussion, and then maybe that could be a tweak. But let's shift focus now. Mr. Mittal, could public sector banks or small finance banks now gain significant market share if they keep lower balance requirements?
Before that, let me say one thing. As per the mandate of the RBI, every bank has to provide a facility of a zero balance account.
Yeah.
That is mandatory. So the financial inclusion aspect is never lost sight of. That is there. But the only thing is this account has limited facilities available. So that is a mandate from the RBI, and every bank has to do that. I don't think so financial inclusion will be compromised. But we must appreciate that this is a trend visible to us. We may choose not to recognize it. The cost of managing a bank account, because the compliance cost has become very high. And it has to be looked at by, RBI is not only responsible for that. There are other government departments which are responsible for increasing the cost of, managing the accounts and opening the accounts. Thirdly, because of digital economy, it has become very easy to transfer money and to put in money and then to take it out. So digital frauds have started happening. When these accounts were being opened through Aadhaar, the digital economy was not that strong. Now digital economy is very strong, and because of that, the frauds which are happening through these accounts, where full verification is not happening, is very high. And therefore, the risk to a bank is very high. Now, coming to your question, yes, public sector bank will be doing that. You look at the penalties being imposed on them because of violations which will keep on happening when you open accounts without doing full verification, and full verification is not possible. It is a huge cost. If I have to visit a customer's house, I need to put an executive on job for it, and he can't do more than 2 or 3 accounts per day. So that means a cost of 200, 300 rupees, 400 rupees per account. Who is going to pay for that? So it's not viable to do that. So I think it has to be looked at from that perspective. What we should be discussing is what are these compliance costs, how they can be better managed, how we can reduce the cost of governing managing bank accounts. That is the serious issue.
All right. Okay. So then, Karthik, sure, sir, go ahead.
Bank will be doing it. They will be doing at the cost as they used to do of managing a government scheme and losing money.
All right. Okay. So, Khushbu, if then banks begin harmonizing higher minimums, is there any scope under consumer law to challenge the lack of genuine choice?
Not exactly, because these are the laws which are governed by the RBI. But if it comes to existing customers facing certain issues which are arbitrary and which goes beyond, then you might have an appeal. But when it comes to making of new laws where they have an autonomy to make new laws by the RBI given to the banks where they can have that, I don't think so any of the customers would have any of the choices when it comes to having any legal recourse for that matter, be it at consumer court or any other court for that. But I think, keeping in mind, if something like that happens, there can be a mandate by the RBI when it comes to differentiations as to how many kind of accounts or minimum balance criteria or a maximum limit criteria which a bank is allowed to permit when it comes to minimum balance, which has to be kept in an account for monthly basis or annually basis on an average. So I think these criteria can come up with RBI. But when it comes to consumer code, one has to understand this is not a consumer code matter, because it's not that today I'm a customer where you have given me, and there also banks have been very clear that any change by the RBI or any change in the policy where they have automation, or where they have an autonomy to make those changes, they can very well make those changes. But the existing customer, if something like that come up, I think there is a leeway where they can go, but not to the new rules which bank can come in, because at last any company, including banks, have to run their business, and profit is something which they have to keep in mind. But at the same time, not taking away rights of the citizen. And on the rights part, we have to be very clear. Had it been existing customer, all of a sudden 50,000,
Correct.
then is when we could have gone.
Correct.
But not to the new customers, because there you have a choice to make that whether I should open an account in ICICI. And there, if you are left with just ICICI in your locality, is where you can still go for it, that I don't have any bank
Right.
available.
Right.
So there
And
comes
there's
a
no genuine
monopoly.
choice.
Yeah, and there comes a monopoly. So that fair trade practice wala issue can come in. But otherwise, I don't think so.
Okay, that's assuming that other banks don't follow suit. So Karthik
Absolutely.
Jhaveri, then does this reshape, do you think, the way people are thinking about savings account? Do you think it could accelerate the shift towards purely investment-led money management?
Everything put together, your relationship size, the kind of loans that you're taking, the credit cards you're going to use. See, Sanjana, some years back, for example, credit cards were supposed to be free. I mean, there was no charge. But today you have all sorts of cards, the white and the black and the premium and the purple, and people are very happy to pay this 10,000 and 15,000 because you want to join that exclusivity.
Sure.
So I would say, let's wait. Let's see what ICICI Bank is going to do. Sometime back, even that 100 rupee ATM withdrawal charge and those kind of things also made of hue and, it was a big chaos. How can bank charge me something? 20 years back, whatever banking I was doing, today, whatever banking I'm doing, everything has to be uniform. I have to have the best technology, but everything for zero charge. So I think let's wait and see how ICICI wants to develop this thing. I would not be in a rush to jump, but I can say that 50,000 of a jump maybe was a little too harsh from the new point of view. Maybe they could have done 15,000 or 20,000, and that would have been a little bit of a dampener in terms of this very, very, irate sentiment that we are seeing at the moment. But let's wait and see what they are going to give, because the bank is very, very clever that if they are going to charge you a fee, whether directly or indirectly by maintaining your minimum balance, there is some bundle of services that they are going to provide in return for those kind of for those kind of demands and charges. So let's wait and see. Maybe they want to transform the MEG, maybe they want to do something else, or maybe they might reintroduce those categories of minimal service and no RM, just digital, just online banking, the way other countries have. You pay X amount of money, and then the way you want to upgrade your services and facilities, you start paying more. And that's where even the overall relationship size sort of matters. But yes, this is a trend of the way things will develop, I think, over a period of time. I think this is the starting point.
And you were talking about a sentiment. So Aditya, I'll ask you this. Do you think that investor sentiment will change if this move triggers a backlash? Because we are seeing, like Karthik rightly put it, everybody's pretty irate about it. The people that we spoke with, they're all account holders outside the bank. Didn't seem too pleased about it and kind of shared the same comment that Karthik made, that perhaps 50,000 was a little too much of a blow. Maybe a 20 or a 15,000 would have been ideal and understandable even.
A couple of points here. Point number one is it should have been slowly and steadily done. As I said, also, although all banks have a zero account balance, but you go to a bank and they will never give you a zero account balance because they have an incentive to give you a account with minimum account balance. That's the reality of it. So what they could have done is, as I said to you, grade those accounts and give the customer a choice if they want to open an account with ICICI. They could also do it with 5,000 or 10,000 balance, but they would have to settle for a lower grade of service. Mind you, I also want to tell this, although ICICI Bank is a private sector bank, it does make a profit of about 50,000 crores a year. That's not a small amount of profit, and it is on back of cross-selling a lot of products other than the savings bank account to the customer. So from my perspective, as I said to you, if you want to enjoy a systematically important bank tag, where RBI gives a lot of benefits to ICICI, ICICI in return also needs to take care of the entire system. And as I said to you, the clever solution to this is to grade those accounts and tell customers you have these four choices. You decide basis your feasibility of how much balance that you can put in. That's a clever way to do it. I think ICICI Bank is smart enough. They will rejig this to make sure that they grade those account balances. And most banks will start to do this where they grade those balances. Another way around this is you raise a little bit of interest rate on the savings bank account. Mind you, all banks provide 2.5% interest on the savings bank account. They could just say to customers that if you put 1 lakh with us, we'll give you 3.5, 4%. So that's an automatic way to retain customers by providing a little bit of higher interest rate. So those are two ways to do it. I think they could practical ways are slow and steady glide path to raising the minimum balance rather than doing it straight away. And mind you, it doesn't solve the large purpose that this is only prospective and not retrospective. Looking at India's condition, I think it could have been done in a slow and a steady.
Okay, all right. Yeah, fresh perspective. And I'm completely out of time. I'm just going to get last set of thoughts from Mr. Mittal from the industry side. With such a regulation, do you think it's going to stifle flexibility or then protect public trust?
Sanjana, let me make 3 points. One, systemically important banks do not enjoy any special privilege from the RBI. If at all, they enjoy deeper scrutiny and deeper regulation.
Okay.
So there is no privilege to them. Secondly, banking is totally deregulated. It's a banker's choice what they want to do. We can't be forcing and telling them what you should not do. It is their choice. Thirdly, as I said, there is already a window available for opening zero balance bank account that every bank is mandated. They are doing it out. I think the important point is that this is a fact which we need to realize. What ICICI has done is their own decision. They are totally deregulated to do that within the framework of the RBI, and I think they have done it much at night after a lot of thinking. But the fact remains that cost of managing bank accounts and opening bank accounts is going up because of regulatory compliances. And that is an indicator that why a bank of size of ICICI is coming up with this. And if that happens, then there will be difficulty in opening and maintaining accounts of those who cannot deposit minimum balances. It doesn't happen by rules, it will happen by operations. Okay. So the bank will discuss opening of such accounts, and to that extent, there will be discomfort to such citizens.
Okay, all right. Khushbu, I'm going to come to you really quickly because you wanted to make a point, but we're out of time, so I'm going to ask you to make it really quickly.
Okay, I would just want to say that I think the move of ICICI is a deliberate business move by betting on the rich. And I think if you see around, it is trying to mirror the global banking strategies which are already existing. Yeah. So I don't think so. It should have gone slowly. I think it's a strategic move that they have done it.
Yeah, I think should have gone slowly was probably Aditya's ideal situation for looking out for the rest of the customers. But we all know that in the real world, things actually function very, very differently. Thank you so much to everybody for joining me this evening. Yes. DK Mittal, Aditya Shah, Khushbu Jain, Karthik Jhaveri, it's been a pleasure. Thanks so much for your time. Tonight's discussion has made one thing clear. Banking isn't just about numbers. It's about access. Banks have every right to manage their business, but when the cost of simply having an account starts excluding millions, the question becomes, who is banking really for? As customers, your best defense is knowing your options and making choices that work for you. Because in the end, it's not just your balance that matters, it's your right to bank with dignity. This is The Big Question. Thanks so much for watching.